Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, man, as always, thanks for having me.
What's your outlook on gold right now?
Well, you know, I know that there is some concerns people have brought to my attention. I was aware of the people are talking about the record number of commercial shorts and saying that that's a sign of a bottom and so on and so forth. And you know, sometimes it works and sometimes it doesn't. Looking at the data, I understand. I mean, I get the point. I'm aware of it. But the bigger picture with gold is that there's a problem with the structure, and the structure is now broken. And I'm not saying that gold won't bounce. In fact, I think we're trying to or moving into an intermediate degree low. You know, what gold does with it, I don't know. But cyclically, the timing is close for an intermediate degree low, and obviously will bounce out of a low, and it could be a good one. But I just don't think, because of the structure, I mean, it's broke. And, you know, I tried to give gold the benefit of the doubt. You know, with this 9-year cycle, I wanted to be bullish on gold, terribly wanted to be bullish on gold, and thought that we would see the additional decline into the 9-year cycle, that it was extending a little bit, but it proved that it did bottom early. And since then, the performance has been horrible. And, you know, that's just a matter of the chart. And, you know, you look at it and, you know, the structural violations of some of the previous cycles that we've seen there have never occurred on the upside piece of an advancing 9-year cycle. So what I'm saying is that the cyclical structure tells us that the longer term cycle has been broken. And I know that's not a popular story for the gold bugs, but, you know, I got to stick with that structural data. And again, that's not to say that there won't be bounces. In fact, I'm anticipating an intermediate degree bounce myself, but I think the longer term's broke. When looking, the next thing I would like to talk about, you know, crude oil. I think, you know, we've seen a bounce the last few days in crude oil as well. Similar story, you know, the higher degree, or how should I say, it's the overall commodity complex is putting in a higher degree top. The evidence is that, you know, we have a 3-year cycle and even a much higher degree top in the making in commodities in general. Crude oil has been somewhat of a holdout. Obviously, the metals have been leading. When I say metals, I'm not just talking about gold and silver. Silver's been weaker than gold, but then you look at some of the industrial metals. But anyway, back to crude oil, same thing. I think, you know, it's a bit of a holdout, but in the process of a much longer term top. Looking at, the dollar, you know, we talked about the longer term bottom that occurred back in February. And, you know, I've been concerned for the last few weeks about the technical juncture on the dollar. And there are some things here that, it's gotten my attention. I mean, you know, when we talk about the structure, you know, the structure is not broken yet on the dollar, but, I want to see some, how do I say this and it sound right? I'm cautious, with the dollar here. I want to see some things mended when we get into the next intermediate degree low, or things could change. Right now they haven't, but it's something I'm watching very, very, very closely. The next one, bonds. As we moved into, we had a longer term degree low also due in bonds this year. And, as we moved into that low on my charts, we violated, the long-term upward trend line from 1982 as that low was being made. And, so that was a bit of a warning, because there's never been a time since 82 that a decline into that degree cycle had violated that line. So it did, and I think the low was made. But the performance coming out of that low has, again, I've tried to give bonds the benefit of the doubt because of that higher degree low, but the performance has been horrible. So bonds are flirting with a failure of a higher degree, low. And if that happens, then, bonds have obviously topped and, interest rates are going, I guess you would say significantly higher. I mean, we've seen the low. And so, in interest rates, and they're only going to trend up from there. Again, obviously there was counter trend moves with everything, but bonds are really at a critical spot here, and, flirting with, like I said, a shift, not just a cyclical change, but a shift in overall direction.
We'll have more with Tim Cyclesman Wood right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, some of your prognostications say we're looking at a giant bubble in the equity markets. What kind of methodology did you use to come up with that?
Well, Jim, the methodology, let me address two things with this. Number one, it's the same methodology that I used with, all the other calls. And not to digress and, not to, talk about previous calls, but to make the point. I use the same methods that I have employing today at the 2000 top. And in fact, that was an article in Stocks Commodities magazine, and I said that, gave the target that we would violate the 2002 low, and we did violate it. I'm sorry, that we would violate the 98 low. And we did by some 200 points. So not only, what did it make the call, but I gave a price objective. In that case, I was able to come up with a price objective based on some specific cyclical stuff. And, hey, it worked. And, that was with the decline into the 2002 low, violating the 98 low. And, the same thing when we came out of that low in 2002, and it began to stretch and extend. I said that it was extending, and the exact words out of my mouth throughout 2005 and 6 and into 7 was, hey, this is an extended cycle. It's making matters worse, and it's going to end badly. It's only making matters worse, I think, was my exact words. And that's exactly what happened. It was the worst decline since the Great Depression was the label that ended up being put on it. And, same thing, gold called the bottom in gold 2001, the top in 2011. I tried, like I mentioned before, I tried to be bullish on this bottom in gold. It didn't yield out. I mean, the structure just wasn't there. The housing top in 2005, when everybody was screaming, peak oil in 2008, made the call on the air, on another show, immediately after that top, like the next week after the actual tip top. And so, and then, like I said, the recent low on $1, another one. So what I'm saying is, I said all that to say this, is not to talk about past calls, but to say that, yeah, there's a methodology to that. You don't throw a dart at a board and make those longer term calls. In the current case, you bet it's a bubble, and there's no question about it. The same methodology tells me it's a bubble. And, I have some long-term data. I hope that you read, and if you haven't, I hope that you will read the current letter. I have some long-term data, and they're showing, indisputably, I think, just what a bubble it is. Going back to 1800, showing the economic cycles, the cycles in commodities, how the relationship with equities, and there is absolutely no question about that. Now, what's different this time? Well, the size of the bubble. Coming out of the 2009 low, we all know that monetary policy was thrown at this, and it's extended and extended and extended and extended, and nothing has bitten. Every time this market has tried to take hold to some sort of a top, it has failed to bite. We finally did get the 4-year cycle top in 2015, and one of the weakest declines into a 4-year cycle low in 16, and then the bubble just blew up even further. And since then, nothing has bitten. So I haven't said, that we've peaked yet, because I hadn't had any structure. I mean, we've had numerous attempts, but nothing has bitten. Where are we now? There's cracks everywhere. But again, we have to see some things bite. And I have some examples, some charts. I know I'm getting a little long-winded here. You may need to take a break, but I've got some examples and some charts I would like to go through briefly without too much detail and explain some of these cracks that we're seeing and what I think they mean.
Go ahead, Tim.
Okay. If you look like, for example, I was looking at, since I talked to you and you're in Canada, I looked at the Canadian chart. And, everything we know pretty much ebbs and flows together. It doesn't necessarily peak on the same day. And in other words, if you're talking about the Canadian Stock Exchange, or if you're talking about, the U.S. Stock Exchange or a European exchange, I mean, they all move to pretty much the same cyclical rhythm. And I don't know if you're aware, but, Canada, you guys had a crash in 87, just like we did. Topped in August, a bottom in October, and, you had a 98 4-year cycle low, top and a 98 4-year cycle low as well, and a top in 2000 and a top in y'all's case 2008 versus 7. It's the same thing. So the structure, while it's different, it rhymes, is what I'm saying. And looking at y'all's market, you had a high in July, and so, that's just a few months ago, y'all made a new high, but since then the structure has been a little weak. It's not as strong. The U.S. markets are leading, particularly the Dow Jones Industrial Average is obviously leading, and I'll come back to that in a minute. But the Canadian market's just not terribly, but just a little bit weaker structurally. Nothing broke, just a hint. But then as I flip through the markets, and I'll try to get through this, you look at, we go to the CAC, and, the same thing, 98 top, 99, 98 low, a 2000 top, same cyclical, basically, pattern. But in that case, 2007, it made a lower high than the 2000 top. Still had a 2009 low. We still had a top in 15. We still had a 4-year cycle low in 16. But this advance, in the case of the CAC, it's been relatively weaker than the other highs. So there's it's a bit of a warning. There's just not quite as strong. When I look at the German DAX, the same sort of thing. We made a same pattern without boring you with all those details, but again, we made a high in January of 16, and since then, it's been the structure it's been showing some signs of weakness. We look at the FTSE, the same sort of thing. More recently, the FTSE made a high in May, but more recently it's been pretty weak. See, and we're also seeing that same sort of thing. There's a Dow Jones World Stock Index. If you look at it, the structure there, I talked about before that left translated structure, which is a bearish structure in short, but there's some left translations there that have not been corrected. It's just kind of lingering. Nothing's developed. It's a crack. Nothing's developed. And that's reflective, obviously, of these weaker indexes that I just talked about. But then to dig deeper, if I look at the stocks and the STOXX, and what that is, it's 600 of the largest, or not the largest. It's representative of 600 it's large, medium, and small cap components across 17 European countries. And I can name the countries, but that's futile. I mean, it's a broad-based look at Europe. And what you see there is, same pattern with the same extreme top in 2007 and the lows and so on and so forth. And, of course, it had a 4-year top in 2015, decline into a 4-year low in 16. This advance, whereas the industrials and the Canadian market and some of the others, this 4-year cycle has carried them to new highs, not Europe. And, so far the high there was back in January, but it has not bettered the previous 4-year cycle top back in 15, and the structure is kind of, again, it hasn't really deteriorated to the point you say it's broken, but it's not real healthy.
Tim, we'll talk more about that when we return.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, so what are all these different markets telling you what's about to happen?
Well, what I'm saying is, China's even weaker. And so what I'm saying is that they are telling us that there is a general weakening is what it's telling us. And then, for the people that's reading all of the analysis and the research documents that I put out, and that long-term cycle that is trying to take hold here, what it is telling us is that something is going on. And it's like turning the battleship, as they say. It's taking a long time for the shift to take place, but it tells us there is a shift. It is happening. It is a process. And there is no question in my mind the degree of the bubble that it is. I mean, the data is what the data is. I'm looking at it. The fact that it is taking forever, I can control no more than you or anyone else, but it doesn't change the data. It does not change the data. And what I'm saying is that the U.S. markets are by and large, providing camouflage, if you will, to what is true, because everybody looks at the Dow Jones Industrial Average and the S&P, and nothing, like I said, nothing has stuck there, nothing has gelled there, but it doesn't change what it is, what's going on, but it just provides cover for it, because nobody really pays attention to anything else. And so, all I'm saying is that you bet, there is no question in my mind that it's a bubble. And I think I've said before, but we aren't there yet. And I think eventually something, one of these technical setups as we come through a technical juncture, it's going to stick. And then when it does, it will deflate, just like every other bubble in history. The thing I think makes this one so dangerous is that nobody sees it, believes it, understands it. And I think that's because it's gone on so long and it's such of a higher degree. The thing that really scares me about this is that, there's going to be very little warning, very little setup with it. It just eventually just pops. And, people are just completely blindsided by it.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.